Well, good evening. And this is a special council meeting to discuss the budget, and it's December the 8th, 2025, and I'll call the meeting to order at 4:32. And you have the agenda in front of you. I hope everybody has read it very thoroughly because it is very important. Are there any additions or deletions to the agenda as you see it?
To you, Mr. Mayor, there's no additions or deletions from administration.
Okay, seeing none, we will move on with the presentation, the City of Brooks Budget Survey results. No adoption of it? Okay, I got the other one. Yeah, okay. So it's been moved by Councillor Phillipson that the agenda be adopted. All in favor? Carried. So now we'll move on to the City of Brooks Budget Survey results. And that will be Jordan.
Through the chair to mayor and council, I'm here to share the highlights from the 2026 Brooks Budget Survey. You have the full report in front of you, so I'll keep this brief and focus on what residents told us. The survey ran August 1st to 31st on engagebrooks.ca. It helps us understand priorities for services funded by property taxes. This year, 496 people participated, which is our highest response rate since the survey began. Thanks to a Back to the Future themed campaign that made the process more fun and engaging. So we asked residents to rank city services from most to least important to them. The top priorities were RCMP and policing services, snow and ice removal, then road and pavement maintenance. After that was parks and playgrounds, and then recreation facilities and programs. When asked where services could be reduced, athletic fields received the most votes, followed by community development and parks. We also asked residents if they feel like they receive good value for their property taxes. 56 said yes, 320 said no, and 120 were not sure. This shows a clear concern about affordability and perceived value. We received 413 written comments under the question, if the city could improve just one thing in 2026, what should it be? The most common themes were roads and infrastructure, so fix potholes, sidewalks, and improve snow removal. After that was lower property taxes and reduce spending, more activities for kids and families, attract diverse businesses, address weeds, garbage, and property upkeep, stronger enforcement and crime prevention, and affordable housing, and more green spaces. Residents also shared additional feedback. Common themes were affordability and rising property taxes, faster snow removal and better road maintenance, community appearance, cleanliness and bylaw enforcement, public safety and proactive enforcement, economic development and job creation, accessibility improvements for crosswalks and mobility, and animal control suggestions like trap, neuter, return program for stray cats. Most respondents were long-term residents. 75% of respondents have lived in Brooks for 11 years. The largest age group was 35 to 44. In short, residents value policing, snow removal, and road maintenance, but affordability and community upkeep are major concerns. And that's my report, and I can answer any questions council might have.
Does anyone have any questions? Okay, seeing none. Thank you very much. Oh.
Mr. Mayor, Jordan has to leave us shortly. He's got personal commitments this evening, but to start off, I just want to thank that group that's sitting in front of you here tonight. They put countless hours in, worked diligently in putting a budget together that's very palatable for this community, and I just want to thank them for all their dedication on this. They have put countless hours in, and I really appreciate their support. Thank you, Mr. Mayor.
Okay, well, then we'll move on to presentation of Budget 101, and that will be Director Leibel.
Thank you, Mayor. Yes, I've got a quick presentation. Well, we'll see how quick. This evening about not just the budget, but also where we are today. So the City of Brooks. So we'd like to go over 4 topics, including in this presentation, the municipal budget process, the City of Brooks finances, municipal taxes and other revenue sources, and how tax assessment works. So for those who don't know me yet, my name is Brian. I'm a Director of Corporate Services. With me is Kathy Slaney and Cheyenne Langer. Between us, we have 20 years of municipal budgeting experience. And as mentioned earlier, our main purpose for this presentation is to build out the framework, the where we are, so to speak, which will be followed by the where we're going budget presentation. And we'll ask that questions be held to the end, just so we can get through the material. So there are roles during the budget process. Obviously, the role of council is overseeing the municipal financial health and approving the budget, providing feedback regarding service levels and financial impacts, and alignment with their strategic plans. So the role of staff, municipal budget is composed of many individual budgets for individual departments. And so as an extension of the earlier thank you to the finance team, would also like to thank all our other colleagues, the directors and managers who contributed for their individual portions of the budget. Finance gets to take the credit at the end of the day as the messenger reporting to the CAO and council. But ultimately we're mostly just the data collection and analyst in the process. So in understanding the municipal budget, it's important to understand that it's an extension of the strategic plan that reflects our community's priorities. It includes the operating budget for daily services and the capital budget for long-term investments. The operating budget covers services such as waste collection, parks, and emergency services, while the capital budget funds infrastructure projects like roads and facilities. And together those budgets ensure that the municipality can deliver essential services and invest in future growth. It's also important to understand service levels. As mentioned earlier, there's a direct interaction between service levels and costs and budgets. Service levels are an extension of the strategic plan and community's priorities with an obvious impact on the municipal budget. Service levels are applied to both internal and external municipal services and are the foundation for business plans, staffing, resources, and budgets. Oftentimes, service levels are established by prior councils, and that has an impact on the current budget. There's also legislative framework. Being a creature of the province, a municipality is governed by the province. The Municipal Government Act governs key sections, including annual operating and capital budgets. It prohibits planning for deficits unless covered by accumulated surplus, and regulates borrowing. For example, Section 242 mandates the adoption of budgets. Section 243 outlines budget content requirements, and Section 248 governs borrowing practices. Understanding the MGA ensures legal compliance, financial sustainability, and responsible governance. It also empowers council to make informed decisions within a clear legislative framework. So it's important to understand tax rate and revenue requirement. Assessment determines property value for taxation purposes. It's conducted annually using mass appraisal techniques and is based on market value as of July 1st of the previous year and physical condition as of December 31st. Taxes are levied based on assessed value following the ad valorem principle. Council sets tax rates and approves tax bylaws, which may vary by property class. Property tax is a primary source of revenue for municipalities and must be fair and transparent to ensure equity among taxpayers and financial sustainability for the municipality. Overall, the city of Brooks collects about 18 million in property taxes, of which about 14 to 15 million is purely for municipal purposes. The rest is requisitions for schools and libraries and other requisitions such as housing. So the tax rate and revenue requirement, it's important for us to kind of spend some time on differentiating between tax rate and overall tax revenue requirement. So to illustrate this, we've got a slide with the municipal tax rates over the past 5 years. So it excludes requisitions, amounts collected on behalf of the province or other entities. And so this will help hopefully illustrate the interaction of the tax rate with property values. So you can see here, it rises up to 2022 and then kind of moderates and falls down to 2023 and 2024. However, over that same time period, we track the percent increase on the annual municipal tax revenue, and the annual municipal tax revenue increases every year. So here you can clearly see the difference that the mill rate is a function of property values as well as budgeted revenue requirement. So it's possible for one to change in a different direction than the other one just because the assessment values are changing. So if assessment values are increasing, you will get more tax revenue, and you might be able to do that by having lower tax rates. So as another illustration, we've got a number of communities, and I know there's a few of them on the slide, but if you're looking at the slide, the one in the middle, just right above the 8, that's where the city of Brooks is. And so you can see on this slide, there's a lot of different mill rates, and we're about average or a little bit above average in terms of the communities on the list. However, you can see when we go to some stats gathered by the city of Lethbridge on cost of living that we're pretty low compared to a lot of those other same communities when it comes to the annual property tax on medium single family home taxes. And so that's the difference between the mill rate being where it is compared to the other communities and the average cost to the single family homeowner. And once again, the reason why this has Lethbridge highlighted in yellow is because it was a survey done by the city of Lethbridge. And you can see the city of Brooks is on the far left of the chart, close to the lowest. Another interesting stat is in regards to the taxes paid by the average household. So for average household spending, you can see in red the federal income tax at 13.8% of the average household budget, and provincial tax at 6.2%, not including the portion they receive out of property tax, which is right at the bottom, that's 0.4%. And so a portion of the property taxes, as mentioned earlier, go to the province. The municipal portion is 1.4%. So just to go over those numbers again, municipal taxes out of the average household budget is 1.4% of the average household budget. Federal taxes are 13.8%. So we are 10% of the value of the federal taxes for the average household. So just to explain some other revenue sources, apart from taxation, there's 4 of them listed here. We rely on a lot of non-tax revenues, user fees, utility service fees, and other items, even transfers from other levels of local government. As was discussed in previous meetings, we do rely on transfer payments even from the county. And so as you'll note in the RFD and the budget coming forward later, changes in those levels of funding, specifically from the provincial and federal government, have a direct impact on our property taxes. So when they are decreasing property tax or grants to municipalities from the province on a regular basis, that increases the amount of tax required through property tax. So we'd like to spend a little bit of time too looking at our current financial position, and I'll just ask that we bring up the Q3 operating report and Q3 capital report. Okay, thank you for your patience. So we'd just like to go over our Q3 capital report. Again, trying to show everyone where we are right now in terms of our finances. So you can see part of the report, we've got $49,428,204 in capital budget. Of course, some large ticket items in there as well as small ticket items. The total costs spent to date of $8,749,579, and the current year actual costs. Oh, I don't think that was included in the actual PDF.
Through you, Mr. Mayor, this slide is not within your package. We will provide it to you post this meeting.
Through the chair, can we just blow it up maybe on the screen a little bit better so we can read it? Sorry, thank you.
So in terms of current year actual costs, some of the major spends to date include the street improvement program at 1.2 million, fleet equipment program replacements at the 104,923, as well as some of the large equipment purchased, the Monroe sander and Monroe plow and the international gravel truck. There was 551,000 spent on the skateboard park, as well as 124,000 spent on the Sunny lift station replacement, and 216,264 on the water main replacement program. A number of these projects that you see on here are completed, and so you will not see them in future years, but a number of them are being carried forward. So for example, the gravel truck, Monroe sander, and equipment replacement program mentioned earlier, those are completed and not getting carried forward. If we could pull up the Q3 operating variance report too. Thank you. So these are year-to-date numbers as of September 30th, showing favorable variances when it comes to revenue. We've got a favorable variance of 591,223, so it's a good news story to date. It also shows projections to year end. Three main reasons for the favorable variances to date include government transfers. Government transfers includes, again, county payments, and so we're seeing favorable numbers in county payments related to agreements we have with them for economic development, and is directly related to some costs, including costs and salaries, wages, and benefits. So that's going to net to zero, the 109,737, when we net that against the related costs in salaries, wages, and benefits. The investment income, we are seeing higher numbers there. There was a conservative budget number presented for 2025, and we are doing well in our investments. It's unlikely that we're going to continue to see those investments outperform. As everyone knows, interest rates are decreasing. So we did manage to lock in a few GICs at 4% though. We're seeing favorable variances in the licenses, permits, and fees, specifically for building permit revenue, as well as for policing revenue and municipal enforcement revenue. Some of those do come with costs, of course, including the municipal enforcement revenue, and we see that again in salaries, wages, and benefits, with more time spent by the enforcement group. Other revenue includes land sales, but it also includes minor amounts for airport fuel and economic development funds for tourism initiatives and event proceeds. There was considerable land sales, and that led to a favorable projection as well for land sales to the end of the year. Land sales do come with additional costs that hit our expenses. And those are seen in materials, goods, and supplies, and will be seen in funding for infrastructure improvements in a reserve transfer as well. Under expenditures, as mentioned earlier, we have higher than budgeted salaries, wages, and benefits due to a number of reasons. One being agreements we have with other government entities, as well as several other departments, including admin, transportation, and municipal enforcement staffing. Contracted and general services, we see some lower than expected numbers there, in large part due to a credit we received from a third-party provider for essentially it's RCMP credit, and includes some offsets in other areas as well, admin and council included. Materials, goods, and supplies, we see a large variance there as well, just associated with the land sales as mentioned previously. And that still leaves us pretty close to budget for our expenditures at $6,000 away from budget in terms of the total amount. And a favorable year-to-date for September at $597,231, which we do expect to decrease to year-end at $208,928. So under self-supported, that is just the utilities, so water, sanitary sewer, and solid waste. We see overall revenues to be on budget, $25,910. There are individual utilities with variances from budget. For example, water is higher than budget by about $300,000, and garbage is lower than budget by about $300,000. So some rate resets in the 2026 budget are planned to assist with the garbage numbers. And we're taking into consideration as well the water numbers in the 2026 budget. Moving into the expenses, there are expenses associated with that high revenue, with higher water purchases and higher water revenues. So treated water purchases has its own line, third from the top, with a unfavorable variance to date and projecting an unfavorable variance to the year end, because we are buying our water, of course, from the commission. There are favorable budget variances in contracted materials, goods, and supplies, as there were fewer repairs on lift stations and lagoons than expected, and work not done to compensate for work done elsewhere in tax-supported supplies. So with that, our budget for expenditures is lower than expected in self-supported, which is a good thing, and we are still expecting a favorable variance to year end. So another good news story there. So thank you for pulling up those PDFs, and if we can go back to, thank you, yes, the presentation slides, thank you. So we're going to speak a little bit more to reserve funds and grant funds in a bit. I wanted to touch on debt, and speak to our debt first. So debt obviously is used to finance large capital projects and not typically used for operating expenses unless there's a short-term variance in expected treasury items. Debt is used to finance large capital projects and must be strategic, affordable, and compliant with the MGA and debt limit regulation. And so on screen, you can see calculations of our debt limit regulations, one being the amount of debt limit available, overall debt limit, as well as the debt servicing limit. So those are your payments on debt. And so you can see the City of Brooks has $47 million available still in debt, and $7,971,000 still available in debt payments, with only $2,688,000 outstanding in long-term debt. So the City of Brooks has very little debt compared to a lot of municipalities. Their debt per capita, you can see, has been very low at now lower than $180 per resident. We only have outstanding debt for 3 projects still: Southeast Sector Storm, Trunk Main, and Meadow Lake Outfall, 2nd Street West widening, and 14th Street land development. Typically, I do recommend avoiding debt unless the interest rate is less than the rate of inflation. However, City of Brooks is in an excellent position when it comes to debt. This strategy would involve strong reserves and really strong reserve contributions. And the City of Brooks currently is sitting really well in terms of the debt, but not so well in terms of the reserves. So as an example, what this means is we've got several large capital items that will require debt. Council's obviously aware of one of them already, including the wastewater treatment plant. And one that you will see soon is the Public Works shop for approval in the 2026 capital budget that will have implications for future years. So approximately a 5 to 6% increase in property taxes related to just that one item for capital. So some comparators in terms of debt for the City of Brooks and other municipalities. And the per capita debt. So the earlier slide you saw 180, and so that's the purple section of this slide. It's hard to see, but the other portion, the green portion, is actually short-term debt. So we have a lot more in short-term debt than we do in long-term debt. Average short-term debt across these municipalities is 1,711, and average long-term debt is 2,005. So we're obviously one of the lowest communities listed here, and doing quite well. And so with that, I think I'll turn it over to our Financial Planning Supervisor, Kathy, to speak about grant funding and reserves.
Thank you. Good afternoon. I'm just going to keep it pretty brief here, but grants are financial contributions from other government or organizations that help us fund operational and capital projects. They're essential because without them, we'd rely more heavily on property taxes and debt. So grant types. Grants allow us to expand services, maintain infrastructure, support community programs, but they're not free money. They come with conditions like eligibility rules, reporting requirements, timelines, and sometimes matching contribution requirements. If we don't comply, we risk penalties or repavement. Also, while grants often fund new assets, they rarely ever cover ongoing operational costs, so planning is crucial. Grants come from federal, provincial, and local sources. Some are formula-based allocations, which are predictable, but still require compliance. Others are application-based, meaning they're competitive and require detailed submissions. Grants can fund both operating costs, like our day-to-day services, and capital costs, like major infrastructure. So just to speak a bit about operating grants help us cover daily service costs and reduce pressure on taxpayers. Just give you some examples of ones that we've got regularly. Federally, we received like a Canada Day grant, which helped us fund some of the celebrations. Canada Summer Jobs helps us fund some of our summer camp counselors. Provincially, we receive a policing support grant, which helps fund our RCMP operating cost. LGFF from the province. Plus, we get a lot of different grants from economic development programs and collaborative projects like ACP. Locally, Canadian Tire Jumpstart and FCSS support community programs, as well as the County of Newell ICF contributions are classified as grants in our system as well. And just to speak on capital grants fund big projects from roads, water, recreation. For example, like CCBF Canada Community Building Fund helps fund our broadband project. Provincially, we received over $4 million for the Stafford Lake Storm Project, $2.1 million annually from LGFF, which helps us fund our annual street improvement program. And then we also got funding for airport upgrades, wastewater treatment plant, which we'll discuss in detail later. And then also, again, the County of Newell shares the cost of the capital cost for fire, parks, and rec, which we classify as a grant, technically. That's it with a quick and dirty with grants. So now we'll just get into some reserve funding. Reserves are like savings accounts for future needs, emergencies, and projects. They provide financial stability and flexibility. While the cash sits in consolidated accounts, we track reserves internally for transparency. Transfers to reserves follow policy and include allocations for growth, emergencies, replacements, and special projects. Year-end surpluses also go into the reserves. This approach ensures we respond to challenges without sudden tax increases. So there's different types of reserves. We have operating, capital, combined operating and capital, and we also have offsite levy reserves for growth-related infrastructure. And then some reserves are restricted by policy, while others are flexible for use. So basically, I kind of included a whole bunch of our reserves, not all of them, they're all in the reserve policy, which should be on your SharePoint. But I'll just quickly, like the stabilization reserve covers unpredictable costs with snow removal or policing, and vehicle replacement, equipment replacement reserve for asset replacement. Repaving tax reserve is what we use for our annual street improvement program. And then we have reserves for environmental projects, council incentives, offsite levies for water, storm, and sewer, just to name a few. And here is the reserve summary. So this is our budgeted, what we expect to see at December 2025 based on the budget. So there could be reserve transfers on top of this, but this is where we would expect to be at the end of 2025. It's kind of small, but kind of gives you an idea of each of the reserve funds. And I'll hand it back to Brian to carry on here.
Thank you, Kathy.
Kathy mentioned snow reserves there. So the idea is, I'm just going to use a rough number. Say you budget $1 million for snow removal one year, and you only spend $900,000. Typically, what a municipality would do is take that other $100,000, throw it into reserve. So the next year, you get a major snowstorm and you're spending 1.2. You've got money that you can go to without impacting property taxes. So we can speak to that further later. Thank you.
Thank you. So I think we're doing pretty well for time. So there was a few other stats that I have available to show council. Just in terms of spending by service area, we've got just a pie chart here to show some details. To give you an idea, of where the tax dollars go. These are also funded, of course, by the user fees and other sources of revenues. A large portion of our tax dollars are going to recreation, parks and culture, transportation services, protection services, environmental services, with environmental services, of course, being water, sewer, and solid waste utilities. And of note, too, for the environmental services, there are a lot of environmental projects as well. One of those projects being the smart meters that are going to get installed if the budget is approved, helping with water conservation across the municipality. So there is a specific reserve also used for funding that, the environmental reserve. So this is just the same data, numerical form rather than graphical form. Some people like the numbers better than the graphs. I like them both, but so the spending by service area is followed by spending by object for the entire municipality, going back by 5 years, just to show in terms of the different types of expenses, again, salaries, wages, and contracts, contract general services, materials, goods, and supplies, interest on long-term debt, which you can see is a low number, and amortization of tangible capital assets. So in terms of spending by object, here's the graphical numbers. And just on that note of tangible capital assets, there were some numbers we could share with council on the overall tangible capital assets for the municipality. So here you can see our municipality has a significant number for tangible capital assets. As of the end of 2024, $256,988,599 in tangible capital assets, of which that is 50% amortized. Of course, you're going to have new capital assets, you're going to have old capital assets, some completely amortized, some not amortized. But it gives you an idea of what the municipality could or should be putting away to replace some of these assets. And this is just the historical cost as well, not the replacement cost of those assets. So examples of tangible capital assets include land, buildings, roads, bridges, vehicles, land improvements, and machinery and equipment. So just to look at some spending stats, going back to our expenses, to compare it to other communities, just in terms of where we're at. The City of Brooks is up there on the top. So this is 2024 expenses in red and revenue per capita in blue. And so harkening back to our earlier discussions about taxes per capita and the overall revenue picture, including not just taxes, but user fees. This provides a nice comparison of the overall revenue we'd get per capita. So per capita for our municipality at around 2,390, where you can see the other municipalities vary quite a bit. Some of them up to 7,269 per resident. And I think that one might be an anomaly just because they also have a natural gas and electric utility, which would be collecting some revenue. So some of the other communities might be good comparisons as well for that reason. And those stats are from municipal affairs. So we didn't gather those stats ourselves. Those are straight from municipal affairs. So with some time left over, we can spend some more time talking about how tax assessment works, or we could get right into the budget.
Okay, let's just go into the budget.
Okay. All right, well, thank you for sitting through those slides. I know it's enjoyable for some of us, and for some of us, we're just glad you stayed awake. But so I guess with that, I'll turn it back to the budget expert, Kathy.
Hello again. Okay, can we make this a little bigger? I'm going to be talking on this slide for quite a while, so bear with me. I just want you guys to be able to see it. Okay, so as a reminder, anything that is not funded by grants, user fees, or reserves must be funded from municipal property taxes. In 2025, we had a municipal tax increase of 5.75% and a forecasted increase of 5.95% for 2026. The tax revenue increase is not proportionate with the tax rate increase, as Director Leibel said in his earlier presentation. For example, last year we had a tax revenue increase of 5.75%, but our tax rate actually went down. The assessed value increase driving the tax rate down. The percentage increase depends on the municipal tax revenue from the previous year. So in 2025, we had budgeted 15 million in municipal tax revenue. So in 2026, the number we're looking at is 150,000 added or removed equals 1%. So just keep that in mind. So what I'm going to start with is the tax supported budget, this slide here, and I'm going to be talking about the 2026 budget deliberations column. And I'm just going to kind of go through line by line so you guys kind of know what everything is. So staff work really hard to keep the tax percentage low for 2026. We're currently sitting at, as you can see, $731,943, which is 4.86% municipal tax revenue increase from 2025. Some of the measures that we took as staff to keep the tax increase down were, we proposed an increase to franchise fees, which we're all aware of. We deferred a debenture to 2027, which we'll discuss when we get to the capital. I'm going to talk about a few of those things. We maximize usage of grant funding allocations and new grant funding options. We maximize use of current reserve balances. We realized some extra revenue streams. Some examples of those are building permits and municipal enforcement. And then we removed some of the requests that we thought that we could maintain service levels without. So those are a few things. So what makes up the need for the additional 731,000 in revenue? I'm just going to give you a summary here, and the directors can definitely speak to more details on that at our next meeting or whatnot. So basically, you've probably already heard this before, but I'm going to talk on it again. But the RCMP is something you're going to hear us talk about a lot. And the main reason is we currently pay 70% of all RCMP costs. We have a population of 14,924 based on the current census. As soon as we hit 15,000, we have to pay 90% of all of those costs. So that's like the biggest thing when you hear us talk about RCMP. So we're trying to prepare early. We started a few years ago with some reserve transfers to phase that in so that the taxpayers aren't hit with like a big surprise. So we're working on that still. So that's going to come pretty obviously. I think 2026 they do a census. 2027 we'll get the results, and then we'll get hammered with that. Another thing in RCMP is we did lower some fine revenue to align with actuals. So, but I just want to note that municipal enforcement revenue increased to more than make up for that reduction. Insurance, legal fees, benefit premiums have all increased or expected to. Wage increases and cost of living adjustments per our collective agreement. We made some adjustments to the budget to align with actual cost of providing services to keep up with inflationary pressures and cost of repairs and supplies. We made some adjustments that were required due to actual contracts with our assessor, some information technology contracts, tree maintenance, software programs, just to align with those contracts. Electricity costs are expected to rise. And then there's increases regarding snow removal, and Doug stole my thunder here, but I had a note here to explain to you that any surplus in snow removal gets transferred to a reserve so that we can use it for years when we're over budget. And it's the same with the cost of policing, actually. There's both that reserve uses for both of those areas. And then if there's any external organization funding requests, that is often funded by tax revenue, but not always. So that's an explanation of that item. The next item, 5,459,617. You'll notice in 2025 it was zero, and you might be wondering why. So I thought I would talk about that. On your tax notice, you have municipal property taxes, but you also have Alberta education taxes and Newell housing taxes. So last year, our senior management didn't want to budget for the Newell housing or the education. They just didn't want to see it in our books as revenue or expenses, but we did, and we did in the past as well. So they removed it last year. That's essentially us just putting it back in, and you'll see a corresponding expense. So there's a net zero. The next item, the 510, 335 in government transfers. The main things in there are, you guys just approved us to apply for a 200,000 ACP grant for a transportation study. That's the bulk of it. And then the remainder of that is us correcting the budget to account for the County of Newell ICF grant money that we received. It just wasn't in the budget properly last year, so.
Question, CEO Legore?
Through you, Mr. Mayor. Kathy, would you explain, please, a bit about how money's transferred in and then we show it transferred out, i.e. FCSS as an example, but there's others as well. So we have transfers coming in and then
Yeah.
transfers going out, if you would, please. Thank you.
Exactly. So that exact same idea. So you'll see the revenue coming in and then the corresponding expense going out. And I'll explain that when we get to the expenses part too. So it's just we're collecting it on our behalf and we're paying it out. So it's actually not our expense, even though it's a spending. That good? The next item, franchise fees, an additional 330,000 in revenue, which you guys are all familiar with. This bylaw was brought forward, and the official approval will come in 2026. But we budget it assuming that it would go through and on a proration based on it being approved in April or being implemented in April. The 78,000 in licenses, permits, and fines revenue. So this includes the additional municipal enforcement revenue I spoke about and the building permit fees, which both offset the reduction in police fine revenue, which is also included in there. The 10,000 for penalties and cost of taxes revenue. This is to correct just the budget to align closer with our actuals. Then the next one is the 38,000 in user fees and sales of goods. This is mostly made up of land lease revenue and airport lease revenue. We're just adjusting the budget to reflect the actual contracts. The 154,309, this is a reduction in revenue, and that's because in 2025 we had quite a few one-time items that were funded from reserves. So we're just removing all of those one-time items that we don't need reserve transfers for anymore. So we just less reserve transfers. And the last one is just 110,680, and again, that's just a revenue reduction for budget corrections that have been identified over multiple departments to reflect actuals. We just want to get as close to actuals to make the variance reports more accurate. So that's the top portion. Now I'll just get into the expenses portion. So the first one I already touched on, that's just the expense portion of the Newell Housing in Alberta. That's us paying it out. The second one is the 395 is just salaries, wages, and benefits. So that's the cost pertaining to the living, cost of living adjustments for the collective agreement and step increases. The contracted services of 342. So basically the two larger items in this one is related to IT contracts that required to be adjusted to actuals based on some decisions that were made in 2025. And then there's also the transportation study for 200,000, but again, there's a corresponding revenue item because it's being funded from a grant. And then there's other small like public works and parks due to inflation and maintaining service levels. The 64,000 in materials, goods, and supplies relates to some fire radio replacements that they have requested, and street sanding budget increase required to maintain current service levels. The 78,000 in utilities is a reduction actually overall because the natural gas is expected to decrease quite a bit, so utilities, the costs are going down overall. The next one is the 46,578. That's actually a decrease in costs. And what that one is the Newell 911 requisitions. So at the Newell 911 meeting, they decided that they weren't going to bill municipalities for their requisitions for the next couple of years because they have a bit of a surplus. So that's just us removing that expense from our budget for 2026 since they won't be billing us. And then the next item, the 324, transfers to individuals and organizations. So there's a few items in here. First one I'll bring to your attention is Grassland Soccer Association requested $150,000. we'll get into the actual requests, I think, at the next meeting possibly. But this is something that our previous council wanted us to bring forward in the current deliberations. So we have put it in here, and we put it in to be funded for the operating contingency reserve. So there would be a corresponding revenue item for this one as well, transfer from reserves. So per the reserve policy, the operating contingency can be used for any emergency expenditure upon approval of the CAO to the extent of the purchasing authority of the CAO, and for any one-time expenditures upon approval of council. So that's how we put that in there for now. There's a $10,000 in there. $10,000 is also in here as an increase to council's grants to org budget. So basically it's for you guys to consider external funding requests. So right now in the current budget, there's only $4,000 in that GL that's like uncommitted. So if you approve this additional 10, you'll have 14,000 of uncommitted funds that you can consider supporting external organizations with, should you choose to approve that item. And then the remaining difference is, it's actually just correcting economic development budget. So how it works is the county pays half of the economic development costs. In 2025, it was in the budget at 50% and no corresponding revenue. So we just corrected the budget to put the expenses at 100% along with a corresponding revenue from the county's payment. So it's just a correction. Any expenses added, there is a corresponding revenue added. So there's no net difference in those items. Same goes for airport. We just corrected the budget. So then moving along here quickly, the 8439 is just bank service charges, and that's just us adjusting the budget to reflect more closer to actuals. And the 522,402 is funding for infrastructure improvements, and that's just budgeted reserve transfers and then operating contributions to capital, which we'll get into once we get to the capital section. And then the next page here is basically the MGA requires a 3-year forecast as part of our budget. So this is a 3-year tax supported forecast by function based on the construction price index. We use that index as we felt it was more reflective of the economy in Western Canada. You will notice quite a jump, 2027 on the very, very bottom there. I'll talk all about that once we get to capital, but it has to do with the whole debenture and tax increase that Brian already alluded to. And let's see, what else do I have here? And then the next slide is the same thing, but instead of by function, it's by department. So it's just a 3-year outlook by department, but the same information, just a little bit different. So we're going to move into the rate supported now that we've talked about the tax supported. I'll talk a little bit here before I hand it over, but basically I'm just going to touch on some quick items driving the need to increase revenues in this department first. So there's increases in NRSC treated water rates and NRSW landfill requisition rates, increases to commercial cardboard and garbage pickup contract cost. There's increases required for broken garbage bins, lift station repairs, irrigation repairs, and hydrant replacements. In this category, we've also deferred a debenture for capital cost as well, which we'll discuss a little later. And I will pass it over to Brian to talk more about utility rates.
Thank you, Kathy. So I'm just gonna, maybe we might need to zoom out again. Oh, I don't think we had those slides in there.
The end of December 10th meeting.
It might be. Let's see if I can get those. So I guess those must not have been in the package to council either. So maybe we'll just wait for that discussion on utility rates until the 10th.
Okay. Okay. Do you want to make this bigger? Okay. Sorry, I know it's just a lot of information. So basically, this is all the capital requests for 2026, and I just want to show you the summary and explain a few things. So all the projects are listed, requested amounts, project description, and then we've come up with like funding suggestions. So we have grants, county contribution, a lot of them based on the current ICF or agreed upon, reserve, operating, and debenture. I just want to mention the annual programs, and they're the ones that I have a little note where it says already established in brackets after them. So those are annual programs that were previously approved by council, and they basically allow staff flexibility to replace items and work on recurring annual projects accordingly. So the intent is that staff can do things annually, or they can postpone them and like carry forward the funds. So for example, I know the playground gets playground equipment replacement program. They get $30,000 a year. They'll often save 30, and then when they get to 90,000, they'll go and like do a big project. So that's the intent of those ones. And you know, for Don replacing his mowers, he doesn't have to like individually list every mower. He just knows he gets so much money to. So I just wanted to bring those forward because there's no necessarily request forms for those ones, but you should still know the intent and agree or disagree or, you know, discuss those ones as well. The next thing I want to bring to your attention is the 12th Street paving. So it's third from the bottom there. You'll notice we have a 0. And just the reason is that, so it was in there at 1.9, almost $2 million. We were going to fund it from a grant. But basically, it's not in the 10-year capital plan. It is quite a high, you know, dollar amount project. So after some discussions, we thought it might be better to defer it to the 10-year capital plan, which per our policy would be done for the 2027 budget. So then it'd be in the plan and in the budget, and it just might be a better, but that's just what we would suggest, but it's definitely up for consideration either way. And then the other thing I wanted to bring up are the big ones that I kept putting off throughout the whole presentation. So for any of the projects requiring debentures, you can see there's 3 of them on there. The far right-hand column is the debenture column. So basically, we're anticipating that debentures won't be required until 2027. So we haven't included any of the cost of borrowing for these in the 2026 budget at all. So while we would have to bring forward borrowing bylaws, I just want to illustrate the potential cost in 2027, so it's very clear to you guys when you're approving these projects, the impact it will have on future years. So basically, the Public Works Shop, so that one is the one in the middle, I guess, of the debentures. So the debenture that would be required for that would be almost $15 million. So right now, at the current rates, that would cost us over $881,000 in principal and interest payments per year for 30 years. So just to put that in context, that would be a 5.8% tax increase this year if we did include it in the cost for this year. And that's why you saw that big jump on the 3-year forecast for next year, because it included that, assuming that it could possibly be approved. And yeah, we can't use grant funds for borrowing, typically, unless there's a special one that I don't know about. And then the wastewater treatment plant is the 17 million one. So that would cost us $1,061,969 in principal and interest payments per year on a 30-year term. Typically, this would have to be recovered through utility rates somehow. So you can imagine the increase that would be required there. But As mentioned previously, so this capital project was approved as a budget adjustment in 2025 already, but we just wanted to include it in the 2026 budget for information, just because it's such a significant item. We just wanted it, that we could keep talking about it, even though it's essentially approved. The borrowing bylaw has received first reading, and the advertising requirements have been fulfilled for that, and we did not receive any official responses either for or against it, just to let you know. So that bylaw will be brought back to be determined once we kind of figure out our budget plans here. And then the other item is a smart water meter replacement. So if we were to get a debenture for that, for the 1.7, based on our current funding proposal there, it would be $154,000 in principal and interest per year on a 15-year term, because that's the guaranteed lifespan of those. And again, that would typically be recovered through utility rates. So with that said, sorry, I feel like I spoke really fast, but that covers our operating and capital budget changes. If you do have, I'm not sure if we're doing questions today or sorry, but that's all I have.
Are you going to continue on?
Thank you. So we've given a brief overview, well, brief to us anyways, overview of the financial situation to date that the City of Brooks sits in, and then another overview of what is coming with our budget for 2027 for operating and capital. And so with that, we'd like to take some time or give council some time to consider and develop questions, I guess, for city staff. And we plan to come back on December 10th and meet again with council to answer council's questions and go over items like the utility rates and go over those in some more detail. So that concludes our Budget 101 and introduction to the 2026 operating budget and 2026 capital budget. So I'd like to thank everyone for your time and patience.
Thank you, Brian, Kathy, and Cheyenne for your input. It's much appreciated. And so,
Mr. Mayor, we have a couple items in closed session. In the essence of time, we've only been here an hour. If council wants to get into some of the questions tonight, we're more than prepared to do that after we come out of the closed session. I don't expect the closed session to take that long, but it's up to council if they want to get in. That will leave that to your choice, and you can let us know. Thank you.
yep. Thank you very much. So it's been moved by Councillor Falkenberg that council close the meeting to the public for agenda item 7, advice from officials as per section 29 of the ATIA at 5:35. All those in favor? Carried. Thank you very much.